How will the upcoming recession affect Bitcoin? This is a question that everyone who owns or is involved in Bitcoin should be asking. Now, some investors are extremely bullish on Bitcoin for the long term, over the next 3, 5, 10, 15 years. So they might be looking past the recession. But it's still important to try and understand how the recession might affect the price of Bitcoin and Bitcoin in general, so that one can be prepared for the possible outcomes that might be coming down the road. Now, in this video, I'm going to seek to answer the following questions. Number 1, how will retail investors react? And will there be a good buying opportunity during the recession if prices see a dip because of how investors react? Number 2, how will smart money investors react? And will there be a good shorting opportunity heading into the recession? And then finally, number 3, will the prices of Bitcoin see a parabolic rise during the recession, or will the prices see a catastrophic dump, or will it be neither? Now, what all three of these questions come down to ultimately is, will a recession cause the majority of those in the market to sell their position, hold their position, or build on their position? And I've worked out, in order to answer this question, we need to start by looking at the people who have invested in Bitcoin and understanding how they're going to react during a recession. So to break this down, we're going to simplify things and look at two main groups of investors: retail investors and smart money investors. Now, I know these two groups are made up of different types of investors, but don't worry, we'll get to that. Now, this is a post from an individual, a retail investor, who's not sure if he should sell his Bitcoin or tap into his emergency fiat cash in order to pay and meet his expenses. So he's got a problem with his car that he needs to fix, and in order to fix it, he either needs to sell his Bitcoin or use his emergency cash. So although this is an anecdotal example, many retail investors during a recession could find themselves in similar situations where they're not able to make ends meet, and in order to do that, they need to sell the Bitcoin that they've purchased as an investment, and they're going to be weighing that up. So one interesting thing this individual says is, everyone can buy and hodl, but when you need money, you may need to sell even though the price is cheap. So basically, there isn't a choice there. He, in his mind, needs to sell in order to meet his expenses. And during a recession, when there's more pressure on people and there's more of a pinch and people can't make ends meet, they're just more likely to sell that Bitcoin in order for hard cash. Well, in order for fiat cash, I should say. Another quite interesting thing the individual in this post says is, I'm pretty sure that if I sell, the price will increase. So he's fully aware that the price of Bitcoin is likely to increase going into the future. But I definitely need the car for groceries and other trips such as work, fun, etc. So it kind of shows, and obviously in this situation it might be 100% correct for him to sell his Bitcoin. So I'm not commenting on that. There's nothing wrong with that. That may well be the best financial decision, but it shows the difference in mindset from a retail investor who's thinking more short term. How can I make ends meet this month or in the next few months or even this week? And the mindset of a smart money investor or institutional investors who are thinking more long term and are thinking more strategically. And this is especially true in the case of retail investors who may have bought or will buy Bitcoin on credit, so using a credit card or using a loan in order to make short-term gains, and then when Bitcoin doesn't necessarily see those gains during a recession, then they're going to be looking to sell. Okay, so the next thing to look at is, how will the recession affect the buying and selling from institutional and smart money investors? And this question is a little bit more complicated to answer. And the question here really is, how do smart money investors view Bitcoin and what are their objectives? Because ultimately, smart money investors, some of them are looking to make big gains long term, and some of them, especially institutional investors, are looking to hedge their money in something that they view as being safe. Now, one issue that Bitcoin as an asset has for investors is the fact that it's extremely volatile. Now, if we look at this graph here, we can see that the volatility has been decreasing over time. From 2011, you can see there's a lot of volatility, to 2019, where there's a lot less volatility. But one thing about Bitcoin is that it's still a lot more volatile than other assets. Bitcoin is 4 times more volatile than gold, and it's about 5 times more volatile than currencies such as the dollar, the euro, or the pound. So this may well prevent a lot of smart money investors, a lot of institutional investors, from seeing Bitcoin as a good hedge during the recession, and they might opt to put more of their money in other assets such as gold. And of course, if that happens, that's going to be reducing the price of Bitcoin during the recession. Another important factor here is that Bitcoin hasn't been through a recession yet. Satoshi and his team created Bitcoin after and to a certain extent in response to the last recession in 2007 and 2008. So Bitcoin hasn't actually weathered the storm of a recession before. We don't have a previous case to analyze or to reference. So a lot of institutional investors are going to see Bitcoin as a very risky investment during recessions. It's also important to note that institutional investors, especially those managing mutual funds, for example, have to answer to a certain extent to their clients. And their clients quite often are retail investors as well as more smart money investors. So for this reason, we may see them withdrawing some funds from Bitcoin and storing it in a safer hedge such as gold in order to get the approval from their clients. However, on another note, we do possibly have an example of the reaction of smart money investors during economic turmoil, and that example is in China. When Xi Jinping devalued the yuan significantly in order to keep Chinese goods price competitive with US buyers, despite the tariffs that Trump was bringing in recently, there is some evidence that Chinese smart money was choosing to move their wealth from the yuan into Bitcoin. And the evidence for this is that the yuan was negatively correlated to Bitcoin. So when we saw the value of the yuan going down, the value of Bitcoin was at the exact same time going up in value. There were buyers for Bitcoin at the exact same time. So that leads many people to believe that Chinese investors, despite it being illegal in China, despite there being a downside to investing in Bitcoin in China, were opting to put their money into Bitcoin, seeing it as more of a safe haven than their own currency, which was being devalued. So seeing that example, that could give an indication of how people, smart money investors, view Bitcoin and how they're going to react during a real recession. So then the other side to smart money, separate from the institutional investors, you have the whales, the people who own very, very large quantities of Bitcoin. And a lot of these people are early adopters, and some of them are people who have recently come to understand the value and the potential of Bitcoin. And those people are looking at the long term. They understand the gigantic and asymmetric returns offered by Bitcoin and understand the potential upside versus the potential downside. These are people who are not going to be flustered during a recession and who are going to lose their nerve during a recession. These are people who have already seen 3, 4, 5 moves ahead. They are looking years ahead and they're looking to hold on to their Bitcoin so that they can reap the gigantic rewards that are coming in the future. Okay, so now that we've estimated how these groups are going to behave during a recession, we think that retail investors are going to sell their position. They're going to sell their Bitcoin in order to help meet their expenses and pay off debt during a recession. And on the other side, we think that smart money investors are more likely to hold on to their Bitcoin during a recession, understanding the gains that are going to be possible in the future. The next question to answer, a very important question that you're probably already thinking, is what percentage of Bitcoin is owned by retail investors and what percentage of Bitcoin is owned by smart money investors? Well, we can answer this question by looking at a chart from bitinfocharts.com, which indicates that the majority of Bitcoin is owned by smart money investors. Now, if we take a close-up look at the chart, we can see that 41% of Bitcoin in the market, roughly 7.4 million Bitcoin to be exact, are owned by investors or whales. That's only 2,051 separate addresses. So these 2,000 people are some of the luckiest or smartest people in the world. And these people that own anywhere from at least 1,000 to 1 million Bitcoins each. These are not retail investors. These people are serious money. These people are smart money. And they control 41% of the Bitcoin in the market. That's a massive share of Bitcoin. Then we have the people or the addresses that hold between 10 Bitcoin and 100 Bitcoin. This is going to be a mix of some smart money, some wealthy retail investors, and of course, miners who are going to be holding a certain amount of Bitcoin to carry out their work. Then there's the people who own 10 Bitcoin or less, and these are pretty much going to be the retail investors, the hobbyists, and they collectively only own 14% of the Bitcoin in circulation. So we can clearly see here that the minority holders are the retail investors, and the majority of people who own Bitcoin are smart money investors. These are the people who control, to a large extent at the moment, the swings in Bitcoin that we're seeing. So, to answer the initial questions from the beginning of the video, the first question being, how are retail investors going to react? Well, retail investors, as we've concluded, are likely to begin exiting their positions during a recession, and this is in order to free up capital to cover their living expenses and to help pay off debt. And this will cause potentially a dip in the price of Bitcoin. And so this could create a good buying opportunity as the price begins to fall. So then the second question, how will smart money react during a recession? Well, we've concluded that they're likely to hold their positions during a recession. Even though Bitcoin is volatile, and this could make it less attractive to hedge fund managers and institutional investors, there are also a number of whales and long-term investors who hold a very large amount of Bitcoin, and they can provide support for the price. Whales may also buy into any dips that there are in the price in order to pick up additional Bitcoin at a discounted rate. Remember, as Baron Rothschild said, the time to buy is when there's blood in the streets. This is when smart money accumulates their wealth, during a recession, when retail investors are selling their assets for pennies on the dollar. And this moves us on to our final question, which was, how will the price be affected? Are we going to see a parabolic rise, or are we going to see a massive dump? Well, there's unlikely to be a parabolic rise to 50k or 100k or above that during the recession. This is because a parabolic rise requires extreme FOMO and euphoria from retail investors. And for that, retail investors need excess cash or access to cheap credit. And during a recession, both of these things are lacking. Conversely, we're unlikely to see a massive catastrophic dump to the 3k mark. or below, because there's too much support and stability from the whales and smart money investors who own the bulk of Bitcoin and who are unlikely to sell their Bitcoin during a recession. Remember, they control the price to a large extent because they own the largest chunk of Bitcoin. What we may see instead is a moderate dip during the recession that's relative to the number of retail investors who are exiting their positions. So we may see the price either stagnate around the $10,000 mark, or we may see a fall back down to the levels where there have been the greatest support in the past, either around $9,500 or $7,500. Now, of course, we don't have a crystal ball to see what the price of Bitcoin is going to be in the future. It's useful to analyze situations, estimate, forecast, and be prepared. But ultimately, none of us know what is going to happen with the price of Bitcoin. So this video is not financial advice. If you choose to buy or sell Bitcoin, that should be based on your own research, analysis, and your own decision making. However, if you found this video useful at all to consider what the possible outcomes could be, please give the video a like. It would be really appreciated. And if you want to see more videos like this one, which are looking into the possibilities with Bitcoin, then please subscribe. Thanks for watching.